What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday, and it is time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. This week, we've got Elon Musk selling more Tesla stock as that stock was down big this week. We've got Netflix refunding advertisers on their already highly anticipated ad program, and we maybe got a TikTok ban coming. Let's kick things off like we always do with Meta Platforms. Started the week at 114, was one of the few stocks that was up 4.3%, finished the week closer to $119 per share. That is maybe potentially because Nancy Pelosi is banning TikTok from government devices as the scrutiny over that Chinese-owned social media stock continues to ramp up. There is a spending bill that is making its way through Congress, and it is believed that maybe a TikTok ban will get squeezed into that. Obviously, Nancy Pelosi out here probably owns shares of Meta and Google as well, potentially helping those companies. We'll see if something like that materializes. My thoughts on Washington all the time is wait until the bill is actually signed by the president before you start making any trades or investments based on what you're hearing. Moving on to Apple, start of the week at 141. Like most of these stocks down big this week on actually not a lot of news, down 5% with Apple, finished the week at 134.50. This is after Apple is likely going to have to allow alternative app stores in its iPhones to skirt around that 30% quote unquote tax that goes through every dollar of the app store. This is to meet European rules and also probably United States rules or scrutiny out here very soon. Companies that should benefit from this should be the Spotifys, the Bumbles, the Match, probably even Netflix as well, maybe even Twitter with their subscription service they've got going on. Now, Apple allowing these third-party app stores seen more bark than bite, according to Morgan Stanley. And look, I got to yield to this guy. He's saying that the worst case scenario that Apple would see just a 1% revenue hit and a 2.5% hit to its earnings if they were to allow these alternate app stores, allow payments to flow through third-party websites or even the third-party app itself and not collect that tax. We'll see how this materializes, not only from kind of how Apple potentially rolls this out, but obviously their profits and their revenues as well. Moving on to Amazon, started the week at 88. This one actually held up pretty nicely, down about 0.7%, finished the week really right there at about $88 per share. There was that big November retail sales report, and it was a big miss by almost everybody. You saw retail across the board from really Amazon, but also Walmart, but especially the department stores. Most of those stocks down big this week, as it appears that the tightening from the Federal Reserve is certainly taking its impact on people's wallets. iRobot fell for its 7th consecutive day earlier this week as the deal spread between Amazon's buyout price, I believe that's close to about $60 per share, is now kind of at its widest point. iRobot trading at about $47, close to $48 per share. Again, I believe Amazon's buyout is closer to about $60 per share. That is obviously due to the fact that the regulatory environment on all of these companies right now not allowing a lot of these deals to go through without tons and tons of effort by these companies' corporate lawyers. Amazon is going to publish a new Tomb Raider video game for several game platforms coming up. We'll see how successful that game ultimately ends up being. Moving on to Netflix, this one down huge this week. Started the week at 316, even ticked up to close to 331. It's amazing. From a technical perspective, this hit the mark perfectly, and then they got some negative news, and it was just a cascading effect. Down 8% Netflix in 1 week, down to about $290 per share. This is on the report that advertisers' refunds are coming in after viewer promises were missed by Netflix. So the way these advertisings work really across the board at NBC, but also at a Netflix, is an advertiser pays for an ad to be shown, and then Netflix promises a certain maybe millions of viewers to view that ad. And now what happens at NBC, ABC, ESPN, Disney, those types of networks is what they end up doing is they actually keep the advertisers' money, and then they run what is called make good advertisements. So maybe there's a football game that didn't get as high a rating, so maybe they'll carry an ad spend over to next week's football game or vice versa. What Netflix actually chose to to do is actually send that money back. And so in some cases, it was due to the fact that you had advertisers running very specific campaigns targeted to a holiday shopping season. And so refunding the money, as opposed to doing like a make good or another ad on another program to get to that viewer mark that it was promised, well, they decided to just refund the money over at Netflix. The commentary that I saw is that maybe we shouldn't draw the conclusion that this means the advertising rollout is kind of hitting a little bit of a speed bump. But I think more specifically, this was kind of a sell the news by the rumor type of event, as Netflix has had a tremendous run up over the last 6 months. Stock's been on fire. It was meant to give a little bit of it back at sooner or later. Moving on to NVIDIA, started the week at 168, held up pretty nicely, actually down just 1.6%, finished the week at 165. NVIDIA popped earlier this week as analysts pondered whether or not that Chat GPT could be a, quote, Pokemon Go moment for artificial intelligence, or AI. Now, these chat bots have gotten more and more intelligent as people have trained them more and more, but obviously that will be very beneficial for NVIDIA as maybe consumers shift to more of that type of environment rather than kind of a text box, search box that we've been used to really for the last 20 or 30 years when it comes to the internet. Moving on to Google, start of the week at $92 per share, down about 2.6% to finish the week at $90 per share. Not a ton of news out of Google other than you do have this Chat GPT kind of popping up and people wondering whether this will cut into, Google searches. I tell you what, guys, Google can develop that type of technology themselves. They have plenty of capabilities to do that. They have no doubtedly already worked on that, and they have the brand and the reach to meet consumers' desires if kind of the chat box is the next evolution of the search box. Moving on to Microsoft, started the week at 248, down about 1.6%. Finished the week at about 244. This is after Microsoft is reportedly seeing customers becoming more adverse to those software bundles. So what Microsoft decides to do is they're like, we're going to give you cybersecurity, we're going to give you Office 365, we're going to give you your Teams, we're just going to bundle it all up and give you all this software. Well, what Microsoft is starting to see is customers are going to want to only maybe pay for the software that they use. Could dampen Microsoft's competitive advantage. Also could make the sales cycles a little bit longer, having to create different software bundles or maybe only selling one portion of software instead of an entire bundle. We'll see how that materializes across the software space. This is also after Microsoft set a new investment in a $3 billion silicon battery startup. This was a $214 million funding round that valued the company at about $3 billion. The company also, the battery company, also got a $100 million grant from the Biden administration, otherwise known as the American taxpayer. So we'll see how that develops for Microsoft. We also got a little bit more news on that Activision tie-up with Microsoft. They offered Sony not only the rights for Call of Duty on the PlayStation platform, but also on the PlayStation Plus platform, which is a streaming service on your PlayStation. So we'll see if Sony decides to accept that deal or give more pushback for the blockage of that Activision tie-up. Now, this was also very interesting for Microsoft. They acquired a 4% stake in the London Stock Exchange. Now, on its face, when you look at this headline, it's like, oh, well, Microsoft made an investment in the London Stock Exchange. Well, no, actually, it's really interesting. So Microsoft got a 10-year commercial deal with the London Stock Exchange to migrate the company's data over to the cloud. So I saw some analysts saying that this is showing you that the cloud business has become so competitive that you can't just secure a 10-year licensing deal just on the cloud services alone. You actually have to buy a 4% stake, which is a minuscule stake in a company, in order to get that 10-year deal. And so we'll see how this materializes. Certainly would impact Amazon, certainly would impact Google as well. Obviously, Microsoft and Oracle, if they have to now buy stakes in companies, actually put money up to get these large cloud contracts, we'll see how that moves through. Obviously, though, cloud has gotten so much more competitive. It's becoming, I wouldn't say a mature business, but it's definitely maturing to the point where you probably will have to see different types of deal structures in order to get those large cloud contracts under your belt. Moving on to Tesla. Hide your kids, hide your wife. This one's going to be ugly. Started the week at, yeah, that's right, 173.25, down 13.3%. Finished the week at 150. I tell you what, if you're a Tesla fanboy, you grew some hair on your chest this week if you held through this nasty fall. Now, that's after Elon Musk sold another $3.6 billion more of Tesla stock this week alone, likely to fund his attributions into the Twitter platform. I believe Elon Musk has sold nearly $40 billion worth of Tesla stock this year alone, certainly contributed to some of the fall. Now, Tesla shareholders are getting a little antsy with Elon Musk. Kind of reminds me of back in the day with Steve Jobs, maybe a little bit also with Mark Zuckerberg as well, as shareholders getting a little tired of these guys. And when the stock is going up, hey, everything's beautiful and roses smell great. But when the stock is down 13% just in a week, well, all of a sudden you start looking to maybe kick Elon Musk to the curb, as obviously he's spending a lot of time over there on Twitter. And Elon Musk was urged to, quote, pull it together to protect the Tesla brand. That's according to Gene Munster. I tell you what, just broadly my view on Tesla, guys, if you bought this stock at any time to have it go up or be up in December of 2022, well, clearly that hasn't happened, okay? Because this stock is down quite a bit over the last year. Not breaking any news. Stock's down 62% year to date. If you bought Tesla to go up and to sell sometime in 2022, well, you've massively failed on that. But a lot of stocks are down. But if you're buying Tesla for the next 3 years, 5 years, 6 years, 10 years, well, this is what investors are actually made of. And if you believe that this company will be able to grow into this $500 billion valuation, not only grow into it, but expand it into the future, there's literally nothing I would be super concerned about. Let's move on to the technical segment of the show. Kick it off with the S&P 500. And boy, it got rejected at the top of this range. Boy, the bears are still in control of the market. It seemed like for a minute here, if you really zoom in, we did kind of, I mean, it depends on where you draw this little technical line in, but we were right at the top. It looked like the bulls were trying to make one last push, but no, we put up gigantic red candles at the top. Now, in the shorter term, it's not really that alarming. Okay, you're still making a very steep series of higher lows, so this was bound to get back. I think this brings up almost a better than 50% probability that you'll retest the lows that we made back here in October, maybe sometime in the beginning of the year. You do have a little bit of tax loss selling probably the last 2 weeks of this year. It is complicated a little bit in January. Some people do max contributions in January and they just put all their money into passive index funds. That should help the flow. That should help stem some of the declines. But I really wouldn't be concerned if we have another retest of these October lows. We could potentially stop short of that. Obviously, we'll be monitoring this over the next couple of weeks. But look, if you've been following this technical pattern with the S&P 500, what it's done over the last 90 days or so really shouldn't come at any kind of surprise. Now, the only question is, does it retest the lows back in October? Does it hold that level and then retreat? Or do we do another new low, which would take you down to about probably at least 3,400 on the S&P 500? You probably can imagine what I'm hoping for. I'm hoping for new lower lows, wipe all these little people out that can't watch their account draw down 10, 15, 20, 30%, understanding that, look, that happened in 2008 and 2009, and my only regret during that time was I didn't buy even more stocks. Moving on to Meta. This one actually held up pretty nicely. Now, there is this, I have this black line in here. This is a firm level of resistance on the stock, okay? It was the lows back here in December of 2018. A little bit of hesitation back here in 2016. The stock, as you can see more recently, has not been able to get up over that black line. And that black line's right at about $122 per share. So you're really looking for Meta, but Meta is still looking great, okay? We're making a series of very steep higher lows. This is beautiful. A series of higher highs wasn't confirmed this week. Leads me to believe that we'll probably get firmly rejected here at 119, maybe retest some lows. There's some sideways consolidation here at 109, retest the purple channel line down here at about $99, $97 per share. That can be buying opportunities. The reverse, if you get a firm TikTok ban, if you get momentums back into this market, maybe this was just a shorter term move, get a momentum you need for this one one to get above that 122 mark. You get above 122, you're almost assuredly coming over 130 on this one. That would be an area where I probably would be looking to sell any shorter term profits that you might locked into Meta stock. Moving on to Apple. Oh my gosh, we got to clean this up. This stock for weeks tried to get above. So I have an orange trend line right here. So it was just the bulls were just trying to push this above it. Unfortunately though, it had overhead resistance at 149. Higher than that, you have overhead resistance at about, call that 157. It was never able to get over that. Now, unfortunately though, you did have some support on the stock down here at about 137. We sliced right through that. This purple line, we were making higher lows on this one, not confirmed with higher highs, but actually lower highs. We wedged out and we've kind of dumped out the bottom. We're now in this range with Apple where the downside should be somewhere down here at about 123. You get momentum still out of this market. We could actually get to 123, maybe not next week, but by the end of the month, you could have a dump to the bottom of this range. This would be an area where if you like Apple for the longer term, you're not really worried about that app store or anything like that. This is where I could see potentially buying the stock. You got to know as well, Apple's probably in here buying its own shares at these prices. But for now, this stock has so much overhead resistance. It's got overhead resistance at 136, overhead resistance at 150. This orange trend line is still intact. It's going to have to take probably some pretty darn good news, probably from the macro economy, but maybe Apple as well to get over that. So the path of least resistance for Apple continues to be lower. Now, moving on to Amazon. This one, basically flat this week. It is just consolidating still in this box. It's really consolidating at a slightly higher price, probably up here closer to about $87 per share. I still think we could probably go lower on this one as the intermediate trend is still very steep and very down. But the good news is for Amazon, it's holding this level. And if it can hold this level and we can get through this kind of rough patch in the markets, well, it should reverse and you could have very, very solid moves in this stock. Just getting back to like a resistance area could take you, that's like almost 50% higher on this stock. Moving on to Netflix. This one was just this one has been trading so technically beautiful. So you had it come up here. We've had this green line marked in for ages on this stock, right about 335. The stock got very close to 335. It might even hit it right on the nose. It got hesitated, and then it got that negative news that it refunded advertisers, and then you put up a big red candle, big series of red candles this week. Still, though, nothing really to be super alarmed with Netflix, okay? It's still making higher highs. It's still making higher lows. It closed this gap as we thought was potentially possible after these earnings and after you got up into that gap. But since you're hanging out here kind of in the middle of the range, I would expect this one probably to keep trending back, but as long as you don't break kind of the 260 mark, which is still $30 lower on this thing, that's another over 10% move down, you'd still be technically an uptrend. So I'm not really super concerned with Netflix at the moment. Moving on to NVIDIA. It also got not quite to the dollar. There was some overhead resistance right up here at about $192 per share. It stopped short of that, about 185. It's pulled back, but you're still making a series of higher lows on this one. I know it's an ugly week for the stock market, but you've been on such a massive rally. I think that's an understatement, especially when you're talking about NVIDIA. I mean, it went on a 70% rally. You got to give some of that back. And we'd actually expect NVIDIA probably to maybe even back test this upper trend line. I'm going to change this upper trend line that we've got drawn in here to maybe like an orange color. So we would expect this one actually to kind of back test to that, take you down to maybe about $1.50 on this one. Wouldn't really be alarmed on it. You break through that, then you're probably retesting some lows, but this stock is actually holding up relatively well given the circumstances and considering the valuation on that one as well. Moving on to Google, also met some overhead resistance right at about $100 per share. Didn't quite get to it this week, but then got rejected immediately from that level down. Looks like we're probably going to retest the bottom of this trend line, take you just south of probably maybe $88 on this one. Probably would be an opportunity to dollar cost average into Google if that's what you like to do. Moving on to Microsoft. This one did something a little bit differently than the rest of these stocks. It actually actually broke up over the top of its trend line, and that's your signal to sell, guys. I know there's a lot of people that can't stomach these stocks going up, going down. They can't stomach Jay Powell and his interest rates. These were your times to sell. When you get to the top of a range, just like we saw with the S&P 500, when you got to the top of the range, that was your opportunity to sell. Similar to like an NVIDIA, you got to a top of a range, you should have sold. Same with Netflix, you should have sold. You really shouldn't be buying at these levels. Same thing with Microsoft, not interested in buying at these levels, but we have pulled back into the channel. It looks like we're probably heading back to the middle of the channel. We have a green box marked out here with Microsoft. Might not be the most exact green box you've ever seen, but anywhere between about 195 up to 230. Obviously, it'd be not very aggressive at the 230 mark, but you get down here south of 200 on Microsoft. I tell you what, you come back here and retest these October lows, make new lower lows. That would be an area where I'd be very, very, very excited. Moving on to Tesla, talking about exciting. Again, I know the Tesla crying fanboys can't handle this stock doing anything but going up. But the first thing you do with Tesla is you kind of stretch out for a little bit. We got a chart going back to about 2015. We had a 50% drop back in 2015, 2016. You had another 30% drop shortly after that. Back in 2019, you had a 53% drop on this one. Then you had a gigantic drop of over 60% back during those March lows. So from peak to trough this year with Tesla, you've made a 63% drop. That is actually nothing out of the ordinary when you're looking at high volatility stocks. Because what you have to factor in is since our last 63% drop, the stock is up 540%. Folks, that's in like 2 years. This stock went up 540%. There is not a stock that I've ever seen make that type of move that doesn't follow it up with some type of reasonable pullback. And 63% after a 540% move off of the previous lows that this stock made seems very reasonable for me. Now, the good news for Tesla is you should have some support for this stock, just about 13% lower. So I guess we could do another 13% down week for Tesla next week. Should have some support at this stock at about 132. That area should be defended relatively well. The other good news is at some point you are going to have a technical and maybe even a fundamental bounce on this stock. Should take you, maybe if you get down to these lows, you can come back to the previous resistance point. That's a 34% rise. You come back to the top of the channel. Again, just confirming that you're still in this channel. From the lower end of support at 132 up to about 250, which again would just be a technical bounce, in my opinion, would be a 92% move in this stock. And some of you might be saying, well, that's crazy. Well, no, it actually is not crazy. Tesla made a 125% move from November of 2020, so basically 2 years ago, to January of 21. So over a 12-month period, the stock went up 125%. I'm not breaking any news here for you, but I see a lot of this stuff on FinTwit and in the comments on my section, people just literally crying over Tesla going down. Guys, stocks go up like this so fast, they have to give some of it back. And you actually should be excited if you are actually interested in investing in Tesla for even the intermediate term. These types of drops are exactly what you want. But in the shorter term, look, the path of least resistance is down on this one. A lot of people are negative on what Elon Musk is doing. These things are going to blow over. We will get earnings about 30 days from now, a little over 30 days from now on Tesla on January 25th. And eventually the price to sales, the price to earnings, the revenue growth rate, that is what people will pay more and more attention to. But for now, it is absolutely ugly for Tesla and really most of these stocks. Hopefully you guys have a wonderful weekend out there. We've got actually some earnings next week. We've got Micron, we've got Nike and FedEx and a couple other ones. I'll try to get those videos out and we'll do some more over the holiday period. Hopefully you guys have a wonderful weekend. We'll see you again soon. Good luck with your investments.